A very big welcome to you. Friday the 16th of May, we are live, Trade Live with IG, and I have a very special guest this morning, Mr. Scotty Byrne. How are you?
Yeah, I'm very well, Rich. Very pleased to be here. Thanks for having me on.
Welcome to the show. Now, who is this tanned, bald fella? I hear you ask. Well, Scotty not only helped me through my career, but he was the longest standing staff member of the mighty Credit Suisse, I think, in history.
Potentially. I think there are a few guys in Switzerland who served about 80 years, but yeah, I think of the regular rank and file guys, yeah, I think it was, it's a pretty big number.
So take it, so you started in 1990 at BZW.
Yeah, that's right. 2nd of Jan 1990. BZ, then basically did a few jobs on various desks at BZW, ended up on equities about 1992, market making and so on. Then we got sold to Credit Suisse back in kind of August, September of 1997.
Right.
I basically joined there 2nd of Jan 1998. And that was when actually my first experience of never trust what a CEO says, because the CEO of Barclays at the time in August said, this business is definitely not for sale, and 6 weeks later we were sold to Credit Suisse, so
done. It's the power of the deal apparently nowadays.
The art of the deal, power of the deal, yeah, listen,
so
it can all change.
People, I just want to, I cannot undersell this enough. This guy has seen everything, right? Not only those 30 years from BZW and when Credit Suisse bought them, but he was the last man standing. Rumour has it, Scotty was the one who put the lights out on the trading floor as they were, let's say, the greatest corporate theft of all time to UBS. He might have been the one that took the sign down at Cabot Square. I don't know. I
can't claim that particular credit, but yeah, I think most of the rest of it's pretty much true. Yeah.
So this morning we're going to be joined by other special guests in the comments section. But first of all, coming up, we've got Scotty through with us to 8:20. Then I've got investing experiences. Now, this is a wonderful chap called Kyle Summercorn. Kyle used to be on Casualty. He was, an actor in that BBC kind of circle. He's done a couple of films. But he was also involved in GameStop, and that's how his investing journey started. So he's along to chat all about that calamity. Then at 9 a.m. we got all sessions opening bell with Elliot Harris from our Vol desk, and number of the week with Chris Beecham. And then to finish off, Asan Altaf is taking us through his trading experiences. But you lot in the comments, as well as Jesse 14, as well as Andrew McKelvey, Julian, and away from the numbers, we have some special friends from Credit Suisse joining us. Natalia Maximova, I know, is in there somewhere, so she's going to have the screen up at Citigroup. We've got Mo Patel at HSBC. Yes. We've got Kareem Osman down in Saudi. I'm sure he's watching us as we speak. Basically, so Scotty and I worked together. Well, the first day that I ever knew of the legend that was Scotty Byrne was the January the 11th, 2006. Mm-hmm. And at that point, you worked on the algo desk, the AES?
The program trading desk.
Program trading desk,
yeah.
And the reason I remember the date was because it was the day that Mittal bought Arcelor. And I just joined the mining and steel trading book. And a hedge fund came in at 10-7. Ben Jones-Lee shouted over, "Oi, Heath, so-and-so at XYZ is short some Arcelor. Do you mind just filling him in 25,000 before the market opened?" Heath was on his way out to have a cigarette, of course. "Yeah, no worries. It's fill him at last night's close." 10 minutes later, the stock was suspended.
That's right.
And news started to go round that it was a bid situation and Mittal were going to buy them. So, of course, we were raging. We'd basically been done out of about 150 grand, I think. But then we started to hear, but Scotty's got a load. What happened that day?
So on the day before, we used to do what's called a risk program. So you would have to blind bid on a basket of stocks, where you only would know the characteristics and actually not the names of the stocks. So like the profile of the basket as opposed to the names. So that there was a rather hefty chunk of ArcelorMittal in there, and it was such a big position that we could only trade out of a tiny part of it for the rest of it. I think we got hit about 1 p.m. in the afternoon.
The day before.
The day before. And then, so we were sitting there the next morning, and obviously you sort of unwind the smaller stuff, so you're left with a few core positions. This is quite substantial. And then we saw the stock got suspended, and I remember saying to Naz Al-Qadari, who was sitting on the desk at the time, who became our eventual boss, we were sitting sort of looking at each other and going, you just know, because normally on a risk program, the things you got left are generally the hand grenades.
Yeah.
You don't generally want them. If you can sell them, then you should have kept them. If you keep them, you don't want them. So yeah,
Fun selling them for a reason.
so it's suspended for about, I think, an hour, about the longest hour of our lives. Must have had about 7 espressos and walked around the floor about 15 times. And then the news came out that they were bid for. So yeah, of course, it was an incredible day as regards to P&L, but then the head of European trading at the time, she came over and suggested that we offer the client the trade back and to put a line through it.
To cancel it?
Yeah, to cancel it. As a gesture to the client. It was a very large institution. And let's just, I think the phrase goes that she was given short shrift and kind of sent on her way. And to be fair, we spoke to the client. He said, no, all's fair in love and war. You know, it was a trade yesterday and all that kind of stuff. So yeah, it was honourable by them and honourable by us. So yeah, it was very well handled. But yeah, it was that was probably one of my biggest experiences of that sort of agony and then the relief.
What do you reckon the P&L was that day?
I think we're up about $12 million, $13 million, something like that. Yeah.
Just to give you an idea, our budget as a desk for the year was 10 million. So, and the reason I remember it was my birthday. And so it was the first day that we as a desk ever made $1 million, me, Heathy and Bolly. But yeah, what a day. Anyway, that was the old days.
Yes,
and plenty more of that to come. But let's run through some of the overnight moves, and we're going to go into overnight action. So for those of you watching for the first time, this is where we go through the morning newspapers. We'll look at the FT, we'll look at the Times and the big headlines this morning. But first of all, let's have a look at where the futures are. So we're looking down 10 basis points on the S&P, similar on the US tech. Scotty, anything jump out to you there?
Not much of a surprise. As we were talking earlier, it was interesting to see a lot of the consumer names leading yesterday after the PPI data, where if you took those out, it was a defensive-led rally. So if you take that price action out, we probably would have been a bit lower on the S&P, definitely. Nasdaq was kind of circling. A lot of the names are kind of flagging overbought in the Mag 7 particularly. So yeah, I think with this afternoon, you've got the housing starts at 1:30, then the Michigan data, which our friend Mr. Powell dismisses out of hand.
Yeah.
But you got that at 3. So, yeah, I think we're looking a little bit tired.
Do you think that was a sign of it running out of steam yesterday?
Well, we've had if you look at any of the breadth indicators, the 50-day, the 200-day, the shorter-term ones as well, there's a metric apparently in the market called the Zweig breadth thrust, where if stocks jump from, I know, it's amazing the things you read when you've got time on your hands. But yeah, basically that's all flagging. And even though it's looking a bit tired, it's definitely not a sign of it rolling over. If anything, this speed of the shift higher is uber bullish. Mm-hmm. But I think what you now might see is a couple of days and you might be down 0.5% and so on, as long as there's obviously no other new data. And then as we were discussing at the US.
It needs something new, doesn't it?
It needs something new now. I think we're back into, it's kind of extraordinary, really, when you think we're not that far away from all-time highs when what we've gone through.
It's insane. And the rally of, I think it's 24% in a 6-week period has only been seen before in 1982, 2009 and 2020.
That makes sense.
But there was pretty big falls beforehand.
Yeah, that's right.
1982, probably you remember. I'm not sure I do.
Yeah, absolutely right. Yeah, I can't remember which pitch I was on then, but yeah, no, it's. I think the bears are clinging on to, or any of the bears out there are clinging on to the fact that it's not out of the realms of a regular bear market rally, generally 15 to 20%. Yeah. But I think because what's really killed people is the speed at which Trump can change his mind and reverse course. So he's gone from sort of hating everybody around the world to, oh no, it's fine, let's all go back to it, and then suddenly he's around the Middle East, he's securing loads of deals left, right and centre, loads of new plane orders for Boeing.
And
love him or hate him, he's a sales guy, right?
And the chips. Nvidia is, you know, the earnings potential now of Nvidia looks incredible, with Abu Dhabi touted to be the largest AI campus outside of the US. That was the deal that came out yesterday. Yeah, we've got front page of the Times up there. Aviva, again, more warnings to Rachel Reeves. Do not force British pension funds to buy UK assets. There's been a lot of noise about this in the last few days, hasn't there?
I think it's one of these things you can't force the toothpaste out of the tube. You know, at the end of the day, a pension fund is to invest in the places where it gets the best return.
Yeah.
Whether they can create kind of a sovereign wealth fund like the US has, I don't know if there's any change down the back of the sofa that Labour can find to create a sovereign wealth fund. But yeah, I mean, it just kind of seems to me that the growth is, you know, starting to pick up, as we've seen. It looks like we're on the verge of a deal with the EU as well for certain aspects. So that makes sense why the FTSE and Europe are looking a bit better this morning than the US. But, you know, these things are not going to happen quick enough for people.
So that's right. FTSE up about 30 basis points this morning. The CAC up 40. We've got Asian moves overnight. It was a bit mixed, really.
Not a great deal. I mean, it's interesting to actually see the Nifty, which has just been stratospheric and continues to be so, where last year it was dogged by all the corporate scandals and sort of over-leveraged. It's a massive options market in India. I think it's bigger than the actual stock market. That. Yeah. Right. So a lot of the retail guys out there all trade options. So maybe that's an IG platform thing, especially with Tasty.
Yeah.
You get yourself out there.
Exactly.
Yeah. So in India, the leveraged options market is just gargantuan. Absolutely gargantuan. So you see the Nifty, if you have like a 1 year graph or something, it had a proper kicking when the rest of the world was sort of looking okay. But then from nowhere, it's just kind of started to. And again, it's sort of on the negotiating side of the better deals with Trump, and they're standing their ground and so on and so forth. I mean, you think of the short conflict recently, India-Pakistan, that got sorted pretty quickly. Again,
the shortest conflict in history.
Almost.
And there we go. So that's what Scotty's talking about there. So I've got the MSCI for India there. Of course, the ETF, I've got that one in my pension, in the ISA. But yeah, there was an opportunity there, wasn't there, really, back in March?
I think it was, it's one of these things when, as you know yourself, when you're coming in every day and markets go down a lot quicker, it's the old stairs up and elevator down. It's very difficult to see an index like that breaking out.
Yeah.
And to commit to it and to try and watch it every day when everything else is going on. But yeah, I mean, look, it's got some pretty constructive structure there. Shall
we run through, talking about emerging markets, the diversity of our team?
Yes, absolutely. We had a very broad team.
We did, didn't we? So we had Natalia, who was the #1 Russian sales trader, based in London. We had Kareem of Saudi heritage, as well as German. Yeah,
Mo as well, Indian heritage there for Mo. We had
Moonboot from
that's right.
From
and we had Jarek from Poland. Maya from, what was it, Estonia, Latvia, something like that.
Then we had Scotty, of course, Mr. England himself.
Absolutely.
And then we had Sebers, who was from the Parachute Regiment.
Parachute Regiment, that's right.
Who served in Afghanistan.
Yeah.
It was the ultimate, and then of course Scottish man himself.
That's right, absolutely. World's fastest Scotsman.
Yeah, exactly. Fastest Scotsman in history.
Absolutely, yeah.
Especially to get out of a position when he's not making money.
Yes.
Andrew McKelvey asking, did I close out the JD Sports when it was 2% in profit yesterday? I didn't. I was too busy filming with Scott Sheridan from one of the creators of Tasty, and I missed my opportunity. I should have had a take profit level in there. So I've still got it, of course. Right. Otherwise, this morning, Scotty, we've had a look at the Times. Shall we have a look at the Financial Times and see what we've got there? So this, water watchdog woos investors as it seeks 50 billion. So more The only water there is what they're pissing against the wall, isn't it?
Well, yeah, absolutely, and the bonus pool which they're showering themselves with still for key staff. Yeah, I think the whole recession story in the US. I mean, if you saw Jamie Dimon Wednesday, he was at the JP Morgan banking conference. I think Paris, weren't they? Same time as Trade Tech. Nice marketing.
Yes.
Saying he still thinks there'll be a recession, but his bank's going to grow and so on and so forth. So,
yeah, I think we've got that story actually. Just let me see, Jamie Dimon, or it might have been in the Times this morning. But yeah, he still thinks that there's a chance. Here we go.
Yeah.
Still at risk of recession from tariffs. So you can't just play this game that Trump decided to play of all the big threats, the bullying, and then walk it back. Saying, right, we're going to make 60 deals in 90 days, when previously it's taken a year, 18 months to make these deals.
No, that's right. And look, you can't get away from the fact that the level of the tariffs overall is higher than they were 6 months ago, 3 months ago.
10%. So we've got, we did have previously a global tariff average blended rate of 4%, and now it's between 13 and 14.
Yeah. Yeah.
That's got to hurt earnings.
I think that, well, I just think at the moment the US just seems to pull rabbits from hats every quarterly earnings session. But interestingly, because of the regulations out there, you can't move things around. So you have to have, I think it's the Dodd-Frank ruling, where you have to have straight up sets of results every 3 months, or the CEO and the CFO are fined and you could get locked up. So there's no, so it's not like some other countries where you can basically shift the cards around the table or shift the pieces. So yeah, I mean, earnings are good. I think what really helped to support this rally was the jobs data beginning of this month, because even though you're seeing things on the front of the Wall Street Journal where they're flagging, I saw a story a couple of weeks ago where house builders are offering record incentives, free swimming pools and so on and so forth at the moment, and it matched with a headline from the summer of 2007. Almost word for word. So obviously they're trying to put they're trying to put the old frighteners on people. But at the moment, if the jobs market is still stable and you can service your debts, there's obviously higher loan delinquencies at the moment. I saw a table the other day. Loan delinquencies are creeping up, but while people have got jobs, for the most part, if you can service that debt.
And there was nothing yesterday to suggest otherwise. We had the data out, so we had initial jobless claims there, 229. So that's as the average that we've seen. We had retail sales come in slightly higher, although the ex-autos number was a small miss, and the PPI collapsing. So
it's reassuringly boring. Someone did make the point this morning. I did see that that the PPI collapse actually means lower margins for companies. So they're not passing it on yet.
Right.
So that's a function of lower margins. So they're happy to eat slightly lower margins. When you think the US margins have been immense for so long, corporates are probably thinking, well, look, we'll just absorb margins a bit for now. But again, as we saw on the Walmart story earlier about, sorry, we've got high prices because of tariffs, then maybe that will be the next kind of round over the summer. And I did read as well, it was on Reuters yesterday, there's some of the regional feds host meetings.
Right.
So not actually monetary policy meetings, but like strategy meetings.
Okay.
This is on Reuters yesterday, and they were talking about potentially moving away from focus on the jobs market, because the criticism of Powell is that in COVID, he was so focused on the jobs market, he let inflation run away.
Yeah.
Now, again, there's no suggestion that there's some kind of imminent switch of the accentuation. I guess at the moment, he's right to focus on jobs, because if they're holding up, it helps the economy afloat for now. But with, looking like, on CME FedWatch, you got rate hike probably now for the September meeting after Jackson Hole. Yeah,
after yesterday's data with that lower than expected PPI, we're back to 2 cuts priced in. But you're right, when are those 2 cuts?
Yeah, that's right. Yeah, so it was interesting to see the bond market rally a bit yesterday, because I was really struggling with where yields are.
Yeah.
And where the equity market is, which, as we know, our teachings over the years were, should be pointing to an equity sell-off. But again, housing starts this afternoon with the 30-year where it is.
Mm-hmm. Now, with all your experience in the market, I know you really enjoyed working for Rodrigo Rodriguez, didn't you?
Yeah.
Now, I think Rod is joining us this morning as well. He's watching you. What was it about Rod's approach and that team that you had that maybe the traders, investors out there can learn from? It's
funny, if you work on a trading floor when there's 400 people, it can feel like the loneliest place in the world.
Yeah, true.
And nowadays, rightly so, the focus is on mental health and so on, but Rod was probably one of the few managers I've ever worked for who wanted to bring everybody with him. And as you found for working with him for a spell as well, I believe, that he was very happy to. And again, look, you had to do your work. You wouldn't be spoon-fed. But he would happily take on any idea as long as you could show you'd done your homework. He was never impulsive. He was a big homework guy where you got to do your work, you got to come in. And it was a real change in approach to the kind of seat of your pants that you had for the years prior.
Definitely. And the morning meeting every single morning.
Yeah, that's right, super disciplined. And the thing which we would kind of love and hate was at the end of every year, so after the Christmas expiry, which is normally around the 18th of December, things really wind down, right? You can start to relax. But no, Rod would have us do an ideas brainstorming session for 2 days the following week. Which was very, very disgruntling. And he would have everybody in. He would have our IT guys in. Anyone who was associated with the product would be invited to sit and to pitch an idea. In fact, one of our best ideas came from a guy called Pete O'Shaughnessy, who worked in IT for us, actually on the desk, but he was our IT guy, a very smart guy. And he bought, I can't remember who used to be the company that used to own, they've been bought now, who used to own all the condom. It's Condom Maker over here.
What, as in Ricketts?
It might have been.
They bought.
I think. So
SSL.
SSL, yeah. So he said at the time, he said, look, things are hard after the financial crisis. No one wants kids, so you should be running a condom maker. And it was one of the best performing ideas of the following year. So as I say, it would encourage everyone to speak up, and then he would also host a party at his house a couple of days later to kind of soften the blow.
Nice.
So yeah, he was probably one of the more modern breeds of manager where it wasn't just about him.
Yeah. And of course went on to big things at Hedge Fund Land.
Yeah, that's right. Yeah, in Hedge Fund Land, and now runs his own one out in Jersey. So yeah.
Right. Excellent. So, well, good morning to Rod out there. Good morning to anybody else. If you are ex-Credit Suisse, in the comments there, let us know. Let us know if you've got any questions for Scotty as well from the OG crew. We've got Caught Short. Hi to everybody. That pretty much summarise my portfolio as well at the moment. Somebody asked yesterday if I was still bearish on the S&P. I've certainly rolled up my options. If you want to just take a look there, you can see there I was short a load of puts, but I was also short a lot of calls. They've been rolled up now. DEX 6000, SEP 6100s, DEX 6175s and 6350s. They were 5600s, 5650s and 5800s. So I've taken a bit of bath on those. But I've got what I think is a nice trade on for this afternoon. Long the 58.85 calls, and then short in more than twice the size, 5,955. That just plays into Scotty's idea that we're running out of steam here. Market, I cannot see it up 1% today. I can see it up 50 basis points. Yeah. Hence why I'm keeping that on. And then I'm also short puts because I wish it would drop, but I cannot see it dropping significantly this afternoon.
Yeah, I think that's actually nice because it will encompass the housing starts number.
Yeah, exactly. Right, 7:54. We are going to be back. Scotty Byrne is going to be ringing the bell for the London Stock Exchange this very morning. That's the peak of your career, isn't it?
Oh. Absolutely.
So join us for the opening bell and then join us for more stories. Daniel K, we're coming for you after the break.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Ready?
Right, so we've got 2 minutes, 20 seconds until we get this opening bell there. Let's have a look at what we've got out. It's obviously a Friday. This is why I wanted to get Scotty in on a Friday so we could chat more rather than have obviously not many numbers to go out this morning. We do have to take a look at that United Health, don't we? My goodness me. Monkey Man, what have you done to us here bringing this up? So, yeah, there was the story that broke yesterday, down 9.8%. And we had the report was that they're under a possible criminal investigation for Medicare fraud. I mean, this is just, what a week for this company. Now we maybe understand why the CEO stepped down a little bit more. And, yeah, on the heels of a filing of a class action suit, which doesn't usually matter. But yeah, the company pooling its guidance. So the stock absolutely smashed to pieces. And I know that some of you have been looking to pick it up on weakness, which, you know, from that kind of chart, it's perfectly normal thing to do, right? But yeah, that extra 10% yesterday, that is a real killer.
Yeah.
So we'll keep an eye on that one. Anything in the UK you're watching at the moment, Scotty?
No, I think the problem is with the FTSEs. You know, it's such a cocktail of a mixture of stocks. You know, everyone always says, "Oh, there's a lack of understanding." I do think it's interesting that what kind of a deal we'll get with Europe. Again, it's not on the things that really matter, but there seems to be. It's almost a kind of aligning of standards on things like food and then freedom of movement.
Yeah.
Because then does that then open the door to equivalence for financial services? Because I did see there is a little bit in there about financial services, I think, particularly as well.
Right. Okay.
So if we get that, because obviously we've suffered with having to outsource a lot of functionality.
Grab your bell there as we count you down.
I'm praying this doesn't fall apart because this is what I would generally do.
Do you want a pen to ring it? There you go.
That's all right, I'll use the old thing here. There we go. Ready?
Right, Scotty Byrne opening the London Stock Exchange for Friday, the 16th of May. Let's see these stocks get underway. It's a slow morning. Obviously, the index, whoever's pressing the button on the index has been out for a bit of Thursday night.
Yeah.
Can't even say in the sunshine because it was brutal last night,
yesterday
wasn't it?
it was freezing.
So yeah, look, the FTSE's only up 20 basis points. So we're not expecting any huge moves, and we're not getting any. So typical Friday morning, Burberry up 90 basis points, getting back towards that 10 quid level.
It's interesting, isn't it?
Now
The China
NatWest-
stuff, that's helping some of the burden of the tariffs and so on, perhaps as well. Yeah, NatWest,
Yeah.
that's interesting, isn't it?
So NatWest is very close to becoming a private company again, or privately held,
Yes.
i.e. the government stake is now down to 1%. How long has that taken them to get out of that?
So that's got to be, what, 15 years or something? Something like that?
What was it
15,
they
if not
called
more.
Fred? Sir Fred?
Fred Goodwin, Fred the Shred.
Fred the Shred.
Yeah,
Well, he
Fred.
certainly shredded the government's balance sheet, but I wonder if they've made some decent profits on it.
Well, I mean, if you're looking at, I guess, especially in the last few years as well, I would imagine that NIM looks better. But again, it's when you see something like, Lloyds. Lloyds always used to be the sort of stronger poster child, even though they got forced into buying HBOS. Lloyds has always held
Yeah.
up. After old Antonio, hyphenated surname chap, ended up running Credit Suisse. He was seen as the archetype of how to run a UK bank. But I mean, last time I checked, the shares were like still a quid or something. So NatWest has clearly got a better sort of more cyclical set of divisions, I would guess, because they still have a markets division, don't they, at NatWest?
Yeah.
And that kind of thing.
It's interesting. The UK banks have been really strong, haven't they? So we've got, although top of the leaderboard is Glaxo. So if you've taken that dividend yesterday, as I have, you've been paid it back today.
Yeah.
So that's nice. You'll get through that into your accounts and your ISAs in a couple of months' time, I would imagine. But you get it back in the share price today. National Grid up 90 basis points. AstraZeneca following up GSK. Shell, little bounce back there. What do you reckon with Shell BP?
I mean, I think you probably have to prefer Shell over BP, I would guess, at the margin as regards how it's run. But I mean, if you're looking at what a lot of the expectant forecasts are for $40 a barrel for West Texas, then that's a headwind.
Yeah,
Interestingly, that single stock performance very much mirrors what we saw in the US last night. So some of the drug stocks and the high yield has rebounded hard,
Right.
having been hit on the initial rally. So yeah, very much a defensive rally. So that looks like that's been. So if you were a factor trader, or if your algos are factor based, you're going to be buying defensives this morning, I guess, as an early trade.
Which the algos have taken over a lot of the trade now.
Oh, absolutely. I think the last stat I saw, 78% of all trade is done via algorithm now.
And you started it all.
Yes.
It's all your fault.
I wish I had the brain to have actually said I built it.
There's another thing that Scotty was part of, Flash Boys. Those of you who have read Flash Boys, this is the Flash Boy here. The book was named after him.
Yeah, absolutely. Yeah.
On the downside this morning, you're seeing Rolls-Royce down 0.5%, Glencore down 40 basis points, 269. And Canal Plus had a big day yesterday. I saw Havas. Those of you that are watching the whole breakup of Vivendi, Havas was upgraded by Goldman's today. So we'll take a look at that one shortly. And then Angeline pointing out that there are some big movers in the DAX. So let's go across to Europe. Scotty, what have you got on the upside there?
Yeah, not too dissimilar, more defensive led again. So there's probably nothing jumping out that's sort of out of whack to me. I think initially, interesting seeing InBev higher as well. I guess nicer weather's coming. Is there football this summer or something? That normally gets the beer stocks going, doesn't it?
Yeah, what is this summer for sport? What is it, 2025? No Olympics, no
So
World
is
Cup.
the Women's World Cup this year?
Oh,
Women's
that's
World
always
Cup.
good.
And the Women's Rugby World Cup September.
Right.
The Lions as well. So if you like drinking beer at 11 a.m.
Hey, how many Scots in that Lions team, Scotty Byrne?
Yeah, very good. Good. I thought they were hard done by with a couple, actually, to be fair.
Yeah, could have been even more.
Yeah, absolutely.
When I say Scots, van der Merwe.
Well, listen,
Mick van der Merwe.
Listen, there's a lot of South Africans in the south side of Glasgow, so yeah, I'm sure he's from that part of the.
Right, let's take a look at who's moving down. It's Eon in.
It's a big move for them.
It is, isn't it? Yeah, I wonder. We'll just check to see if there's any dividends there. ASML weak as well, down 1.8. And then we've got Puma, Adidas. Now, what sneakers are you sporting?
I use Hoka's because I prefer them because as you get older, you need a bit more support.
Bit more cushioning there.
More cushioning.
Eh?
I've got cushioning elsewhere, but I need a bit more for my feet. Yeah, I saw the on-running ones, and they're very swish, but there's far too many. As you've made the point on these shows in past, on-running are worn by the trendy kids now, so I don't think you want to be like the sort of oldest swinger in town. Interesting seeing Ubisoft down, the gaming stock. I did see a couple of the China DRs have reported quite weak this week.
Yeah.
Not necessarily in gaming, but maybe that's just a little bit off the top
This
in the
thing was
gaming
down
stocks.
20% yesterday as well.
Oh, is that right? Sorry, in that case I made a bit of a mistake there, not spotting that. But
right, let's look at FX and commodities. We'll come on to your some more of your mistakes later. We want to hear about Scotty Byrne. What is the worst trade that he's been part of? That's coming up in about 10 minutes' time. But commodities just generally lower across the board, aren't they?
yeah, absolutely. Absolutely. It just all looks like a bit of a rollover. Interesting seeing the gold price has broken. That was right on the 50-day as of yesterday, had a bounce off of it. But yeah, the gold price might have just slipped through the 50-day, which is quite interesting. I mean, it's back to where it was pre-Liberation Day. Mm-hmm. So it's an interesting level.
Yeah.
Whether it breaks it with any real significance, I guess, is another matter.
Certainly a bit of volatility, gold and oil just now, isn't there?
I think a few of the latecomers into gold, especially if you don't normally trade it, you can end up in a little bit of a mess. But if you've got a longer term position in that, you just sort of manage around it.
Got to read you out a text I've just got from Sebers. So he goes, "Oh, this is so good. Reminds me of when we used to just sit around chatting shit all day when it was quiet at work."
There you go. Perfect. And now you get to be simulating that environment from the comfort of your own home without having to go to Canary Wharf.
Exactly. Yeah. Good stuff. Right. Arthur Fox-Haig joining us on the early shift this morning, Arthur. You were up early. Normally you're a 9 o'clocker. Attempting to short Rolls Royce after the rights issue. God, that was a while ago. Got burned a couple of times. And went long instead. So well done. That has been the best performer.
It's actually interesting, Rolls-Royce. I did see a thing this week where apparently they are, because the government is so keen to make sure there's a level playing field, basically they are in a three company tender for the small modular reactors.
All right, yeah.
So them and 2 US firms. Mm-hmm. I mean, you have to beg the question where if you're Labour, you've not had a lot of successes where if you can champion a UK company and just say, look, small modular reactors, more they're playing orders for Boeing, Rolls-Royce, why go through the rigmarole of a 3-company tender? But again, yeah, I mean, Rolls-Royce, that could be
it's a done
something to hold for a long time, I think.
Talking about holding for a long time, let's get on to that story. What of the 35 years at Credit Suisse?
Crikey.
What was the worst trade that you were a part of?
Well, actually leaving Barclays to go to Credit Suisse. So, if I go to any other bank in the world, so it's actually, I'm listening to The Trading Game at the moment on audiobook.
And Stevenson's,
Mr. Stevenson's, yeah. It's quite interesting, but he tells a story where he starts becoming a bit more sort of important in City and so on and so forth. And basically he's bossing.
His mind, or?
Well, in his mind, in practice, who knows? But he does say a very good truism where never let anybody sell you a position. So basically, if you remember, and this reminded me of us, around the time of the Swiss abandonment of the peg and the negative 3 months rate going to negative 4.5%.
Yeah.
So his boss called him from the US and said, "Oh, listen, Swissy, something big's going to happen. I've just had a night out with the SMB and blah blah blah. I'm looking at And he said, I'm looking at the Swissy, I think long Swissy short the dollar, because that's where everyone had all been making their money since the GFC.
Yeah.
Long anything else to short the dollar. So he said, yeah, I'll have X amount of that. And so his boss went, right, okay, fine, that's done. What he didn't realise, his boss, been speaking to the SMB, had a position, said to Gary Stevenson, oh, this is a great idea, and sold it to him. So basically the adage is never take someone else's position. So back in 2006, when everything was getting bid for, a broker of ours in Iberia started a service called the Spanish Eye, and the whole methodology was what he called rumorology.
Yeah. Not Nacho Lopez, was it?
No, it wasn't actually. It was another guy, not Nacho, thankfully. Otherwise, I would have flown over there and sorted him out. But yeah, so basically, there was a stock called Avancet, which was a Spanish like mid cap. It was a tech. Sort of the start of like a tech thing. It was sort of literally involved in anything that was kind of, shiny and new.
Right.
And there was lots of stories about it. And we actually made a load of money out of it in 06. So I think we probably made about $4 or $5 million out of it in 06 from a pretty small position.
Right.
But then in Q1 of 2007, the same guy said, look, he said, I think something's going to happen in this. And if you want to increase your size, I've got a seller.
Of course he does.
Of course he does, right? So yeah, so
well, that's cute of him, isn't it?
That was, how incredible! And then
let's just pop up the stocks while we're going through this story, because
Yes.
there are some movers there, and it is JD Sports. Get up there.
Here we go.
Go on, Scotty.
Yeah. So let's just say nothing really happened, and the market started to go a bit sour. So we started to sort of slowly tranche out of it. But again, we most probably had. And again, this is where you're not really looking at liquidity because everything was just going up. And this is the problem with leverage. I've got a great story about leverage actually for you a little bit later. And basically one day the rug was pulled out of it and we lost $6 million in a day, which was quite painful. And my head of trading at the time, who had sat in the meeting with this guy and agreed to take the position on, obviously turned around to me and said, what did you do that for?
It's your fault.
So yeah, the cascade of that. So yeah, that was a pretty horrible. But again, I think it bounced back a little bit, and we ended up, I think net flat over the whole position. But yeah, as a one day sort of was a one day event when you're sitting watching it while still making prices to customers, where you've got a bit of sick in the back of your throat. And
one that I remember, I don't know if Jamie White and Alex Safi are watching, but one talking about sitting watching it. There was one day we weren't sitting watching it, and it was a fight back in 2012, a boxing match, and it was in South Africa, and it was between Sonny Bill Williams and Francois Botha, who was a veteran fighter. Anyway, Safi had quite a big bet on the South African to win, and it was maybe 2 o'clock in the afternoon. So because Safi was convinced that this was going to happen. It's going to be a big upset. It was like 5-1 or something. We all lumped into it. Even the people back office, the desk assistants, everybody in the office, and it was live on television. So we were all around the TV watching this boxing match, shouting. It went to the 10th round, and he was getting there. Meanwhile, we had a massive order for Investec to buy African Bank. And African Bank was
not the most liquid either.
Pretty volatile and not the most liquid. So, of course, to go and watch the boxing match, I just stuck a load of bids in because I knew that they wanted to buy $1 million every 0.5%. So I put all the bids in. Anyway, the boxing match going, come on, Francois, hit him. Yeah. And nobody's watching the screens. Boom, African Bank lowers guidance and expresses concern around markets going forward. So one of the biggest profit warnings that I had seen in South Africa, the stock drops 14%, hits every one of my bids, and the phone line's going. It's Investec trying to call. Safi's like, the phone's going. Go on, Francois. Go. Yeah. Reach. So anyway, we had to take all the prints out for the client. It cost us about $220,000. But we couldn't tell Danny why we hadn't noticed. So I think Danny K to this day, right until this moment when he's watching the screen,
surprise,
thinks that we just didn't notice the profit warning.
Yeah.
And that was the day that he phoned us and he went, Right, the way this call's going to go is I'm going to speak, you're going to listen, and then we're both going to hang up. I don't want to hear any excuses.
Yeah, absolutely. Yeah, I actually remember that because I was actually sitting in London when he was on the desk making that call. And I was like, oh, I wonder what's happened there. It's never going to be good.
Nah, that was not a fun one. Anyway, so Sonny Bill Williams got a lot to answer for.
Yes,
and we didn't win the bet. Right,
nightmare day.
It is 8:15. Let's get an update on those moves then. So you see all the big movers on the upside. On the downside, Land Securities down 2.4%, Rolls-Royce down 70, and the miners doing so as well. Scotty, what would you rather be in now out of those futures markets? Any investment in the world? What take your fancy for your ISA?
For me, ISA, I guess it would. It still has to be the US. I kind of managed to get lucky where I had loads of cash in my pension account, which I've sweated for about the last 18 months.
Yeah.
But thankfully set out in 2022. So it gave me an opportunity to get back in. I mean, it's very difficult to see beyond owning the US just because of the size of the internal market. And again, the more of these stories you see on the front page of things like the FT about it's the end of American exceptionalism,
yeah,
you just think you sort of have to discount it. I mean, I remember in 2008, front page of the FT, I've still got it at home, is this the end of equities?
Oh, really?
Yeah, so unfortunately, it's like the old thing, if you see him on the front of a newspaper or magazine, it's already happened. So again, even though it's where it is, if they can manage to again skirt, and look, the things they're doing, unfortunately, Europe and the UK are just hidebound by so many different interests that it's difficult to have a separate theme. It's like everyone says, like, where are the tech stocks in Europe?
Yeah.
Right? Where are the tech stocks in the UK?
Yeah.
And unfortunately, in the US, it just breeds, and the whole efficient way that they take seed capital out of the universities, like any bright idea gets money thrown at it. And over here, they've only just actually started to do it. So they are starting to build the high-tech belt between Oxford and Cambridge, aren't they? There's there's a new road going to get built, and they're going to effectively look to make us kind of Silicon Valley between Oxford and Cambridge.
An AI version, yeah?
Yeah, effectively, yeah, and to kind of look to get seed capital. But again, right here, right now, it's just impossible not to look at the US again and just, I know it's quite boring, but for a bit of a mix, I wouldn't mind a bit of gold in there as a bit of a protection anyway, because at some point, most people seem to think you're going to have to start QE.
It's had that test now.
Again.
It's had the test of the trade deal, risk on, and it still survived at 3,200. So,
yeah.
Now, I asked Scotty to come in. He said, I'm only coming in if you give me 10 minutes with Angelina as well.
Yes.
So Angelina is going to be coming in here, get to speak to a professional.
Absolutely.
Good stuff. Right. R6 Senna asking, Monkey Man, will it be okay if I ask Rich to forward your chat GPT prompts to research companies? It's a wonderful tool Monkey Man's put together there. It really is.
I was like an encyclopedia of the prompt, is it? Yeah. There's
unbelievable. Like, it streams and streams and streams of research, everything you need to know about the company, really. Because he's put together maybe 30 questions.
Yeah, there's quite a lot of those out there now, actually, but it's very good that someone's obviously built it and has tested it.
Yeah.
Because it's not anything, if you can put anything into ChatGPT, you should be 80% plus expectation of what's going to come out of it.
Mm-hmm. Yeah.
But as you say, the amount of...
It's like our emerging markets desk.
Absolutely right, absolutely. But yeah.
Right, let's get Angelina in here. So thank you very much for coming in. Wonderful, as always. We might let you back sometime. But we'll do a quick 2-minute break. Scotty's going to swap over and, join us. And then after that, I have Kyle Summercorn coming in. You might recognise him off the telly and off the movies. But we're going to hear all about his GameStop adventure into investing. We'll see you in 2.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Hey, we're back on Fast Markets with myself and Scotty. Oh,
Everybody.
Such a pleasure that you've waited for me, because I was there going, will I get time?
I feel a bit starstruck, to be quite honest.
Oh my goodness me. Do you know, when I heard you were coming in yesterday, I thought, oh, amazing. And immediately what sprang to mind were the Star Trek.
Absolutely, yeah.
Is that
Pick me
why
up.
you're called Scotty? Is that...
No, well, I just think it's sort of caught on from there, really. And I'm actually Scott Andrew. I was named after Scottish friends, so obviously that ties in with the whole Star Trek thing. But we mustn't forget the message. We mustn't forget the message, though, must we? Which we got told to say.
Yes.
Please like and subscribe. There's no commitment when you subscribe. There's no financial commitment. It's free, but it just gives you notifications of when the next good piece of stuff is out. So please like and subscribe.
And it will help us towards our way to an LSEG-sponsored bell. All those people out there with any connections that can help us with a bell sponsorship. Please, point them to the show. Get everyone to subscribe. Your mum, your dad, your sister, your pet hamster, everyone. So let's quickly have a look at the markets very quickly first. It is looking like a bit of a sigh of relief after the week that has been quite a relief rally we saw at the beginning of the week, but it's sort of lost its momentum a bit now, right? We're starting
it's a little drift high. I think Europe, understandably, is, as you say, it's breathing a bit of a sigh of relief because we've had a massive macro week, haven't we?
Yeah.
And so far, that's passed pretty peacefully, I guess. I think Asia's just had such a rip anyway. That's probably just spinning its wheels. So yeah, I think Europe is happy with where things are going. As Rich and I were saying about potential UK-EU deal, so that all makes perfect sense. And then I just think the US this afternoon is just those housing starts, and the market does like to trade against positioning though. So, it wouldn't shock me if you just saw markets a bit lower into the weekend because they've just had such a surge high. The market just loves to have a little bite.
Yeah.
At positioning.
And that also ties in with the options market, right? So let's have a look at the options side of things for you, because we talk about giving yourself positive skew here on the show, and having a look at the expiry there. This is the daily first, giving you a look at that. And look at how amazing. I was talking to the volatility desk yesterday. Barely a week and a half ago, we were talking about vol being up at around the, the new normal being the 24 level, 25 level, and now suddenly, Scotty, we're now back to the 18s, the 16s, right? Even looking further out there, let's take a look at the 21st of May expiry there.
Wow.
Yeah, look at that.
It's really dropping. That's
if we joke about this, but if you were away for a specific 2 weeks in April, you might have come back thinking, nothing's actually happened.
What was all the fuss about?
Yeah. What was all that for? So we got lots of trader friends there on the chat asking about the DAX as well. Let's put up the chat, guys. We are morning to you, Jugga. Morning, Arsax and Bigger Beards as well. DAX, one of the ones that have really, this instrument's really shone this week, this index rather. Taking a look at this, do you like the DAX? I know you...
No, I do. I mean, I'm a US stocks person generally, but yeah, I think the DAX, I think for what they've done, that was such a seminal moment to actually act with the stimulus. Now, that's actually woken a lot of people up to Europe, and just shows what's capable when they're actually, unfortunately, it's generally when pressed that things happen. But it's quite interesting. It's rolled off that RSI as well pretty quickly, but then also made that's really trying to test that new high. Obviously, we need to close above, but that's really encouraging for the next few weeks. And the ECB, interestingly, are making the right noises.
Yeah.
Every time Lagarde speaks, the market goes up instead of down, which is a big change for the last
how many
the
years?
last however many years. Oh, it's too many years. So
Yeah.
yeah. So yeah. Listen, I think for Germany, listen, if you ever visit Germany, it's a dream of efficiency, right?
Yeah, everything
Everywhere,
works.
everything works perfectly. And
Don't get me started about the fact that the builders there offer different class altogether. If you're doing any sort of building works or infrastructure,
100%.
everything just moves. But I have a really good German friend who works in a city here, and he says everything works, but don't count on super fast Wi-Fi everywhere. That's Germany.
Interesting.
Yeah, and I thought,
You see, again, that's kind of what Rich and I were talking about, right? About why Europe's been so slow to embrace tech. I think because it's got so many old industries that, and I think that's the difference between, say, Europe, UK, and the US. That even though, yes, the US has old industries as well, it embraces new ones faster than anybody apart from, say, maybe China or Asia as a whole. And
Totally.
and this is why everyone sees Europe and the history and everything else, but I think, unfortunately, it dwells on its history a little too much.
yeah, I'm glad you say this, Scotty Byrne, because I often get ribbed here for, in my pension, I still have 75% weightage on US stocks.
Yeah, I would. Yeah, absolutely. Absolutely. I think that's not
You don't
dissimilar
think
to
that's too
mine.
heavy a skew?
Well, I mean, look, you can only look back about how, if you even look at what's going on at the moment, okay, I know that it's been a very difficult month for people, or 6 weeks, but the fact that you have a president who can pivot as quickly from sort of looking like he wants to make the world want to end.
You can come back to making me feel better.
Well, it's true where you can, and the thing is as well, where you have the bond market says that's enough, and he'll just change his mind. And this is what people don't get, because I think in other regions, like say Europe, people want their politicians to be boring, and they want 5-year plans. With Trump, I mean, it's a roller coaster.
It is. Changes by the day.
And irrespective of some of his attitudes and beliefs, the fact he can go from almost wrecking the world economy to almost fixing it, and then suddenly he's in the Middle East signing deals left, right, and centre.
So, just taking a look at Nvidia, I am very, very invested in this because I took half of my position out in October, and then
Well done.
now it's looking like it's on its way up again. It looks like it's just, it's past that key support level, and now I'm looking at that 146, right? I just think, this to me is a short-term ad. What's your view?
Yeah, absolutely. It's when you actually look at it. So that's a stock that we trade a lot in the trading fund that I'm in, and you can see there are certain names like Apple which are heavily retail driven.
Yeah.
So it wings around like nobody's business. But again, yeah, if you look at it on like a daily or a weekly, it's forming a great chart there from what you showed me. Is that a weekly you showed me?
This is the daily now.
That's a daily. Yeah. So you can see the chop on the daily.
Nice gap up there.
A nice gap up, which you almost want to see it close again before it goes again. But yeah, I mean, look, it's back into an uptrend. You'd want to see it clear the levels it's at the moment, which is just, if you're looking at what's that, 21,200 or something, the sort of high of those wicks there. Yeah. So if you can clear those little
21
levels there.
21,400. That's
Yeah. So let's say for argument's sake, you get through the 21,500.
Scotty, you've got such good eyesight. You've just shown me something. So just going to draw that line there, because is that an upward? Let's see.
Well, so the thing about wicks, which we like to always kind of say, is it's a tester. It's a price test.
Yes, it's a dip of the toe.
Yeah, exactly. It's a dip of the toe. And right here, right now, you can see there's clearly sellers at that level.
Yeah.
But at some point, those sellers are either going to increase or go away, or vice versa for the buyers. And that's why a lot of people, if you're drawing charts, yes, you should use the bodies.
Yeah.
But when you're just looking at those wicks, when you're at such a big level that it's trying to break, you know, wicks are definitely not something to ignore. And it all depends who you talk to about if you're drawing lines and
No,
so
I
on.
totally
But if it clears that, I mean, you see the candle, what was that, April? So that one that had the kind of start of the sell-off. So a little bit further left, you got that start of the sell-off there on the candle, a little bit higher up. So you're clearing what, 22,000 there?
Yeah.
Yeah. So you get through 23,000.
Yeah.
Then all of a sudden you're heading off on Apple, and I should imagine that maybe Nvidia on a daily doesn't look wildly different, but there definitely seems to be. I think the thing that rattled. You see the shape of the price action this week in Apple. A couple of strong days and faded. After Trump, I don't know if you remember, there was a headline from Trump Wednesday saying, I spoke to Tim Cook and they'll be building a lot more stuff in the US.
Yes.
Which, if you've spent, 15 to 20 years building an infrastructure in Asia.
In India, in Vietnam, it's going to be really difficult to unravel, right?
Yeah, and it's definitely been a bit choppier and underperforming since then.
Yeah, yeah. So that, to me, looks like an ascending triangle. But we'll have a look at that later. I agree with you. Short term, looking bullish. I do hold Apple as well as Nvidia and AMD. Another one. Let's have a look at some of the movers across the board here. Whilst we can, whacking up my watch list for you. Taking a look at the FTSE first. Here are some of the winners there. Zooming that in for you, got very good eyesight, sir. GlaxoSmithKline up 2% there after the drug makers got whacked earlier on in the week, right? Because Trump was saying that they're going to look at making US prescription drugs cheaper, guys. So you guys were on in that trade as well. Rightmove up 1%. Do you like the UK health bill? I mean, it's been a shorting. Anyone in that space has been like, shorting, right?
It's such a difficult one because my two kids are 16 and 18, and I wonder where the hell are they going to live. But at the end of the day, the house builders,
Daddy.
yeah, with me forever, yeah. But yeah, I think that there's a carefully constructed supply constraint, and unless you make the house builders have to value land banks in a different way, then
and unless they can,
stocks are just going to
totally, and unless they can change regulation to make all the brown land usable where we can build on, we're going to have the same dynamics.
It's absolutely true, but again, who owns that brown land? It's either the government or the house builders. If it's the government, you should be able to wade it through. So I guess it's not them. Anyway, that's a political thing. This is not a political show.
This is not a political show.
This is a market show.
Yes, and like and subscribe, people. Do punch that like and subscribe button, because if you enjoy this and from the comforts of your home, I've worked in Canary Wharf for a very long time, 14 years actually. Very pleased to be back in the old city where I belong. Where the vibes are. And if you enjoy not having the trek into either places, do hit like and subscribe. Take a look at the losers on the FTSE. Anglo's down 1%. Antofagasta, first stock I ever traded, is down 0.75%. Right? Yeah. And made money on that. And it made me very, very sort of excited about, that's how I got in. That's how
Absolutely.
I got in.
Listen, success breeds success, as they say.
Of course, you mentioned on the show, I was watching your interview and you said there was a point when it felt like you had a bit of sick in the back of your mouth. I had that moment too, trading Northern Rock.
Oh, yeah.
And there was a meltdown in the app. Not going to reveal which app I was using, but everyone tried to head for the exit at the same time, and it just
that was it.
crashed.
So at Credit Suisse, I think around the city, the research analysts, or certainly our research analysts in the banks, were saying it's going to get rescued, it's fine. So the book took a big position in Northern Rock after it had a drop, but then it was effectively nationalised. So I think that really made people, it really brought it home that things can fail.
Yes, so how much time we got, Cammy? Right. We're going to have to head off because we've got the next guest waiting in the wings.
Absolutely.
Oh, my goodness, but it's been such
amazing.
A dream. Please do come back. I'd love for you to look at my, portfolio and also my pension. It made me feel very good about that 75%.
My pleasure. My absolute pleasure.
Right, stay right there because we have Summer Corn back with Rich right after this.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Welcome back, and our first celebrity entrepreneur on the show, Mr. Kyle Summercorn. How are you doing?
I'm good. How are you?
Yeah, very well indeed. Happy Friday to you.
Happy Friday to you. How are we feeling?
Now, pretty vibey actually.
Yeah.
Yeah, it's one of those, early summer weekends that
That's
you're just cruising into. But if people are looking and think, I reckon I'd seen that bloke somewhere before, where would they have seen you before, Kyle?
Quite a few places. I was an actor for about 15 years. Lots of film and television. I mean, notably Essex Boys. I played one of the Essex Boys with Mimi. I was also Big Joe in Private Peaceful, which was thoroughly entertaining and challenging. It was a character with brain damage set in the 1918 wartime period piece. So yeah, you may have seen me, and in stock, I was a stock actor for many, many years.
If anybody watching The Bill or Casualty,
Casualty, Holby, all our stock favourites in this country,
So we might have a bit of footage of you actually.
Oh really?
If I can just pull this across to the right page, because I wasn't going to let you get away with your assistant saying that when you were discovered, you had a bit of je ne sais quoi.
But a je ne sais quoi, I like that. Yeah, I can get behind that.
So here we go. Here's an early interview. I wouldn't say it's probably not last week, is it?
Not last week. That's a young version of me, without a shadow of a doubt. Look how good looking. What have I done to myself? Look at him.
Well, what he's done to himself is got into the food industry.
I have indeed. I run an events catering company now, so I'm Plated Events Management. We're a one-stop shop events catering company. We run several contracts, notably with RADA, the drama school, and then we support the Paddle Social Club with their food services, mostly at the Earl's Court site, which is incredible. It's a really fun journey.
I haven't had breakfast yet.
Have you not? Then I'm not the guy to speak to. I'm going to make you very, very hungry. I'm very nerdy when it comes to food.
Look at this.
Yeah.
Absolutely incredible.
Yeah. Thank you.
Now, it's quite a bit of risk going off. Well, first of all, acting's a bit of risk.
Yeah.
Also running your own business.
Yeah.
And you took that through to your investing at some point as well.
I did, yeah. I mean, as you say, I've throughout my entire professional career, I've always taken risks. Being an actor, massively unstable. And throughout that process, like all actors, in and out of jobs constantly, not knowing where your next paycheck's coming from. And so I would join a new kitchen every time I would leave an acting job.
Right.
So throughout that process, I managed to build this massive breadth of knowledge in the culinary arts.
Diversified across cuisine.
Diversified is the word. I mean, you can probably tell from my menus just had up there that we, take ideas from Asia, from Europe, from Latin America, from all over the globe.
Yeah.
And I've been very fortunate to work with some incredible chefs across the industry. But for me, I went into events because events catering is very similar to putting on a production. Mm-hmm. You're thinking about the customer journey. You're thinking about the artistry of it, what you're putting on the plate, what you're saying with your food.
Yeah.
You're guiding your guests through an experience.
Yeah.
So for me, it's not dissimilar. They're the same thing. We're putting on a production.
Right.
But as you say, I have always been very attracted to risks, to taking risks. And that kind of led me into my trading journey and my investment journey.
Which would have been, I guess, along with so many people and so many of our viewers.
Yes, I'm sure.
Just after COVID.
Yes. Yeah. I mean, that was a time for me where I was going through a crisis of identity. I had these two massive passions in my life, which I wanted to explore both. I had an urge to go and start my own business, which I'm one of those people that started with a kitchen that I built in my garage, and just went for it without any sort of thought of where I was going with it. And then I heard about GameStop.
How did you first come across the? I mean, it made it to the newspapers and everything. But
It did, but this is so. I got in a little bit too late. I had a friend of mine who had invested just at the right time.
Okay.
He had done very well from that massive spike that happened, I think in January it was, 2021.
Yep.
And so I jumped on the bandwagon, foolishly and full-heartedly.
You weren't the only one, let's say.
Yes.
This was, I remember I was in New Zealand at the time, and it was actually also a chef who introduced me to the idea, and he went, and he was on Wall Street Bets, of course, on Reddit.
Right.
And just look at what happened there over, forgetting what's happened recently. I mean, where do you think it was that you got in?
I got in just at the top of that second red line there, just as it started to come down, and then I felt it was going back up again. And everything on Wall Street Bets was telling us, the mother of all short squeezes, get involved, hold. We are the apes and all this business. Yeah. So I got behind it, and I thought, this is going to be the making. This will fund my other ventures. This will be, where I make that seed investment to be able to go off and do all these projects. I've got an entrepreneurial streak in me, and I wanted to find that. That one thing to give me the launch pad onto it.
And it was people who wanted a house deposit.
Yep.
It was people who'd start their own business.
Yep.
Wanted to live that Instagram life.
100%.
And this was the chance.
This was the chance. And being, an actor who's been on the red carpet, and that's the strange thing about the industry is 1 week you're on the red carpet, you're in the papers, you think, oh, that's it, I've made it.
Yeah.
And then the next week everyone's forgotten you and it's back to reality, and I'm in a kitchen whacking out some prep and yes chef, no chef,
Yeah.
So I thought this would be incredible.
You can take the chart off now, thanks. I think we've had
quite, I don't want to relive it any further, chap. Thank you. But I mean, there was a silver lining in all that. That as a result of me full-heartedly shoving all my eggs in one basket, it sent me on a learning journey.
Yeah, because it did cost you some money, didn't it?
Oh, it cost me some money without a shadow of a doubt.
Yeah.
I didn't have a great deal at the time. But I had enough for it to sting.
To hurt. Yeah.
But as I say, the silver lining in that is that I then went on an educational journey. I went and really researched what I was doing. I started with day trading, which I now no longer do.
Yeah.
I am a full believer in long-term investment. I'm a full believer in letting it play out and doing your research, figuring out the fundamentals, and investing in companies you believe in.
Yeah.
You know, that you believe in, that you want to see do well, and then also trying to do everything within my power to support those companies and, you know, use them, pump, you know, my knowledge and do anything I can to spread the word. So now I'm much more involved in long-term investment.
I think one of the best bits of advice I got, and we're talking 15 years ago, was why not just invest in everything that's on the front page of your iPhone?
Yeah. Yeah.
And so, you know, you're not scrolling 4 times to get to you know, Uber Eats or whatever.
Yeah.
Everything that you use, and of course
Correct.
it's now the Mag 7.
Well, that's it.
Yeah.
You know, that's it. But I'm also a full believer in self-investment. You know, you need to improve yourself, your knowledge, your ability to make informed decision.
Well, that was how did you get to the point of, right, I'm going to learn how to invest?
Fear of doing the same again, quite frankly.
But knowing that you wanted to be a part of this
I do.
new world.
I did. I came from an arty background, you know, which was all about feelings and who we are and what we want to say. And it's fabulous. And I am an artist at heart and all the rest of it, but also it's quite a blinkered view of the world, I feel. So when you open it up and you look at what's going on a larger scale, you then get a bigger picture. You then get a better feel for what's going on in the world, and then you know where your money can be working for you. Yeah. And being that I am an actor, and being that I am an entrepreneur and a business owner, I come into not large amounts, but lump sums of cash.
Yeah.
Every now and then. And it is so easy to go off and get yourself a lovely holiday and buy a lovely car. And I mean, I've got 3 beautiful kids, Braden, Quinn, Theon. Mwah, love you.
Wonderful names as well.
Thank you very much. Yes. Very proud of all 3 of them. But it's very easy to go and pump that money into frivolous, fun activities, or to go and invest in long shots like GameStop at the time.
Yeah.
So I then wanted to learn where I can put my money to make it work for me.
And it's all about making it work for you, isn't it?
Correct. You know, that whole thing about time being money is what it's all about.
Yeah.
You know, we've got a finite amount of time, and I've got a finite amount of you know, funds and materials to be able to use. So I need to make sure that everything I do counts. And I like to invest in projects that I believe in, as I said, and that goes both from an investment standpoint and for my businesses.
Yeah.
I mean, I work with the Paddle Social Club at the moment. Paddle is huge, absolutely huge, massively popular sport, blowing up all over the world.
Yeah.
And the guys at Paddle Social Club, Christian Hunter and the rest of the gang, have done an incredible job. And I fully and truly believe in what they're doing, and I'm very pleased to be a part of that journey.
And you've got a celeb involved over at that paddle club as well, isn't it?
We've got lots of celebs involved, but yeah, Stormzy's one of our key investors over there, amongst other people. It's not my club. I run the food services, and I'm honoured that they let me on site.
And, and also, you've got quite an important building next to the paddle club, don't you? That some of your regulars come out of.
Funny enough, I was there last night. The Empress Museum, where they're doing the interactive experience based on The Greatest Showman.
Right. Oh, cool.
Really fun.
Yeah.
Really, really fun. Awesome show, and they come over on a day-to-day basis. They come and dine with us. And as a result, I got 5 free tickets. Thank you, Abby.
Nice.
So my kids went and had an incredible experience. I was supposed to go, but then the kitchen called, unfortunately.
Yeah.
So I didn't get to see it last night, but it was incredible. But not just that. I mean, there's the Earls Court Development Centre where the site is located.
Yeah.
And they've been incredible. We do have some local emergency services as well. There's a massive police presence in the vicinity, massive ambulance park in the vicinity, and we offer blue light discounts and things like that to support our guys in uniform. Yeah, and I'm very proud of where we are within that community and where we are within my community in Marble Arch, and as a result, we get lots of insight into many different industries.
Yeah. And how much work has it taken to, so you start off with the idea, and then you've got to, do you have partners? Do you have to get investment partners in, or it's solo?
No, I've always been a lone wolf, which was one of my problems during lockdown, which really was challenging. So I was quite a shrewd businessman at the time. I've never taken a loan. I've never needed to take any investment from anyone else. What I have done is built incredible ideas, incredible product, and then sold the product to prospective clients, taken deposits, taken their money and put it to work. And then once the job is done, then I take my profit. So for me, that was incredible up until we had this horrible lockdown.
Yeah.
And at the time, I was, again, quite a shrewd businessman. So I was working with a cafe in Mayfair, Cardinals of Mayfair, Franco Cardinale, you absolute legend. And I used to do some favors for him. We helped him build his website, helped him build an events presence, helped him offer things on Deliveroo. He's been doing the same thing for the last 75 years, father and son. It's an incredible sort of mum and pop Italian cafe. Yeah. And I worked there with them as a chef and did all sorts of stuff. But as a result, he would give me use of his kitchen. So from the hours of 3 o'clock till 6 in the morning, we were able to use their kitchen overnight, rent-free, and we would get all the work done like that. And that was the next sort of part of my catering journey after we'd built this kitchen out in Epping in my garage.
And let's just show some of the pictures here of that, not necessarily that incredible work, but some of the dishes that you prepare. And that's on Instagram. Where do people find you on Instagram?
So we're plated_events.
Oh, nice.
A lot of what we got on there at the moment is at the Paddle Social Club, but we are at our core an events catering company. So you're going to see a lot of canapé and bowl food dishes and some sit-down dinners. And we've got plans to be doing lots of supper clubs and things like that. So please come and check it out.
Nice.
Yeah.
Those of our viewers that are at this stage where they want to get involved in investing, they don't know where to start, and maybe they're a bit more cautious because they don't have that ability to take risk like you have done in the past. What advice would you give on making that first step and avoiding the pain?
Diversify. That would be my first, start small. Start small, diversify, and keep a little something back for those opportunities that will start to present themselves, that you will start to hear about, and also spread your build a circle of like-minded people. And this is a great place to start. Your site, your channel is a great place to start. You've got a community. So within that community, you can start to swap ideas, start to learn, start to ask. And I do find that when you find a good community of traders and investors, you love to share information, you love to swap ideas, you love to hear about what's coming next. But diversify, don't shove all your eggs in one basket like I did. Go for a bit of everything. See, and as you said, go for some of the big ones that you know are safe and let it lie, see how it develops. And then keep a little bit of dry powder, is the expression, to go and strike at some of these irons when they're hot. That would be my 10 cents worth.
Wonderful. Kyle, thank you very much for coming on.
It's my pleasure, Richard.
It's been a joy to hear. Did you have any famous lines in those movies that you want to throw out?
Oh,
Bring back the memories?
Yeah, I mean, as Big Joe in Private Peaceful, I was playing a character with brain damage, and I don't want to actually say anything about myself, but I want to thank. There was a young man called Hadley, who suffered with brain damage as a kid, and in the process of researching that character, I worked with him and I worked with the Institute of Brain Injury, and they sent me all sorts of case studies. And I want to thank Hadley in particular, who was incredible on the process of researching that character. And I think if you're going to play something that challenging and deal with those issues, you need to do it justice.
Yeah.
So I don't want to promote myself. I want to say thank you so much to all those guys that helped me on that journey.
Incredible. Kyle, thank you so much.
Richard,
best of luck.
Buddy. Thank you. Same
Angelina will be back after this break.
Bring me the next shiny new thing. Bring me the next shiny new thing.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey, welcome back to Live from Trade Desk with myself, Elliot Harris. Elliot, how are you, good man?
Morning, Ange. Happy Friday.
Happy Friday to you. We made it. What a busy week it's been. I
It
thought
has been
maybe.
a bit more lively.
Oh,
Nice to
it
have
is
the
a
vote.
bit lively. Yeah. Each week we think it's going to be less lively, but Trump always keeps us on our toes. But we're seeing a bit of respite right now, a bit of calm across the markets, and you know, taking us into the weekend. This calm, is that going to stay? Look into your volatility crystal ball for us, Elliot.
I sort of got it slightly wrong last Friday, where I didn't expect anything to come out of the US-China talks.
Well, it was always hard to guess that one, right?
It was. Yeah, so nothing on the immediate horizon. Vol's been hit hard, really has, which I'll cover in the next 10, 15 minutes with a few nice screenshots and bits and pieces. But yeah, Vol's been hit hard. I don't expect it to change too much in the immediate short term.
Yeah, and we've really come back. I was just looking at this earlier on with the last guest that we had as well, taking a look at the options for you and putting up the US 500 and popping up the daily there for you first. I mean, we're at the 20 handle now, which 2 weeks ago seemed like too far-fetched to even get to at this point.
Yeah, it seemed very unlikely. Bull's been absolutely crushed. Yeah, so even during the course of this week, I would say that's probably eased by 6 or 7% fairly comfortably. 2 or 3 weeks ago, that definitely had a 3 on the front of it.
Right, so I'm just going to quickly disturb you there because we
Opening bell,
have
yep.
got all sessions open now. So quickly running that through with you. We have got straight out of the door, the races, Virgin Galactic up 11% there. Peloton Interactive also up a strong amount, up more than 8%. We've got Plug Power also riding higher. Some of the car makers, the EVs, NIO up 2.7% there. The drug stocks also making a bit of a move higher, not by much though. Moderna is up. And we've got some of the miners also having a good session. United Health, Monkey Man up 2% now. So I hope you have hedged your bets there because it has been quite a fall. And as I gather, you didn't come out of that position that you put on about 2 sessions ago. On the losers list, let's have a look at that. Beyond Meat down 1.6%. Any of you eat or are a client of Beyond Meat, let me know here. I am not. I did try them though. I did try them and decided not to buy that stock. JD.com, I'm going to leave it at that. JD.com down 1.4%. General Motors also down there. And Walt Disney up 0.25%. Just want to quickly take a look at Walmart as well, because we did have numbers out of Walmart. It's down just a tad there and down 0.1%. And just checking in on the reason for this is because Walmart's price hikes is a warning sign, says the CIO. We all knew that this is going to be an issue, the tariffs, of course. Walmart, one of those, quite outspoken, saying that they can't hold off on prices soon. But let's have a look across to Alibaba as well quickly before we go back to Elliot. Alibaba, all sessions here up more than 2% there, adding that to my workspace. Alibaba, of course, Q4 revenue at 236.4 million. That was a print. And it was one of those that was good on the outlook front, but Walmart down slightly. Any of those things that I just mentioned, Elliot, along with that softer than expected PPI as well, any of that feeding into the crush and vol?
Sure, just very quick on that. On the Walmart front, I think the CEO came out and said that they're really going to struggle to swallow all of the tariff increases. Those famously fine retail margins are going to be put under significant pressure. Yeah, so I think that explains the slight turn on the stock there.
Yeah, and you see it's down 0.2% now. It's all about the outlook, right? It's not about what it's doing right now because, you know, its revenues were 6% year-on-year rise. But the issue is everyone's now looking towards outlook, guidance. What is the tariff situation going to do to its bottom line? And what traders and investors do not like is uncertainty. Walmart saying it's now projecting, I think, Elliot, it was like 3 to 4% net sales growth for the year. But the fact that it didn't want to give any near-term projections, I think freaked people out a bit.
Yep. Yeah, so just going back to your question. So April PPI yesterday was actually showed the biggest fall in 5 years. So yeah, so data's been slightly soft this week. Obviously, CPI was a small miss as well on Tuesday. So, and there's also a small slowdown in retail sales and factory production. Yeah, so it's kind of put things under pressure slightly again. Now, earlier on in the week before this, the market was pricing in roughly 48 basis points of cuts by the end of the year. Close last night was around about 55. So cuts are maybe slightly more on the table than they were. I was reading some reports from a couple of the banks that I get some research from. One or two of them are pricing in a whole point of cuts by the year end, which for me seems very heavy-handed, and even more surprising was they were expecting this to actually start in September. So at some point in their prediction, they see a 50 basis point cut, which I just can't see. Something rather drastic, I think, we have to be coming in the data, showing clear evidence of the tariffs really weighing heavily on the economy, which just feels such heavy-handed. So for me, I think the wider market's probably on the money, around 50 basis points priced in by the year end. June now is priced probably off the table. Looking like a 90% chance we don't cut.
And then it gets a bit more interesting come July, September.
July, it was a 50-50 a week ago. It's now probably 60% that we don't. It's slightly different for you here, Ange, actually, which we showed last week. If you go to current, so just on the left-hand side, this for me is slightly easier to understand. So this actually gives you the expected probability as you go through each Fed meeting. So if you go to, say, July at the top. And there you can see it's a 60% chance that we don't cut now. So a little bit of a shift here, I would say, over the last week or so. The bulk of it basically driven by this softer data, yes.
JP Morgan's expecting quarterly 25 basis point cuts, starting March 2025. This was when they were projecting or predicting last. But I guess what this all signifies is the amount of uncertainty out there. I don't know about you, but I've never seen this so fluid month on month before, For
us to be now trading higher than we were is crazy.
It is crazy, right? The speed in which we've now bounced back.
It's just been frightening, absolutely frightening. I don't know if you've got the chart there that I sent you about the VVIX, which is the volatility of the VIX, for those who don't know. If you can bring that up on your screen.
Yeah, I'm going to just
thank you.
Save that as a picture. It's very high tech here, very high tech. Because, okay, we're almost there. So that I can make it bigger for all you trader friends out there, because I know, like me, it is coming somewhere. It's hiding behind here. So hiding. Here we are. So to make it much larger for you, here we are. There we go.
Right, so this is the chart. Yeah, so this is the VVIX, basically going back 1 month. So you can see that what we hit roughly just shy of 130% now. That's trading around 94.
Yeah.
So I think even a week or so ago, we were just over 100, which was roughly the 60th percentile. We're now back down towards 94. So it has really eased really quite heavily. VIX now in the front month has an 18 handle, but only just. Won't be long and will be in the 17s, which 2-3 weeks ago, you just couldn't have seen that. You really couldn't. It felt for me that we were going to be stabilising around 23, 24 as a handle.
That's what we were calling the new normal, right? Last week.
Exactly. Yep.
Yeah, and now look at where we are. Right.
Yep.
It's a real. Where do you think the VIX might be in the coming week? I know it's really difficult, but I'm going to try and pull up your next chart as well. Just give me some time.
Yeah. So just a quick precursor to what you're about to show. Just going to show the implied versus the realised vol, and just the spikes that we saw during the main tariff panic days, if you like, on the 4th and on the 7th, and also the 9th. But yeah, I think we are still going to see this ease. I don't think we'll go through. For me, the floor's got to be 17. I'd be very surprised if we start getting into your 15 handle, your 16 handle. That's very much where we were back in Feb, I would say, and that's very much with implied vol on the monthly options pushing again for 15-16%, which, given that 1 month vol at the moment on S&P is roughly 22, around there. Let me just confirm that 1 second.
Right, here we are in its full glory, zoomed in for you. Here we are.
Yeah, so you can see here that the implied vol on VIX, okay, this is going back over the course of a year. It hasn't varied too much, but at the chart, there's quite a big gap, if you like. So a year ago, I would say the vol of VIX was probably trading around about 75%. That's now slightly higher. Front month VIX options trade just under 100%. But you can see that that's come off in the space of, 2 or 3 weeks from 150, 160. So that really goes to show you just how much the implied vol has collapsed out of the market. Conversely, look at those RV spikes.
Yeah.
So I'll show you, there's another chart which we've got to show slightly later, but actually, and I think I commented last Friday, that peak week, start of April, was worse than anything that COVID threw at us, which is crazy given that the VIX itself got to 80 during COVID. It just feels that there's so much more going on now, and that kind of the effects of all this volatility is now much wider reaching. So it felt insanely busier. Really did.
I'm surprised. I mean, I'm not surprised it's higher, but I'm surprised it's not narrower, if you like, that we haven't seen, a narrower spike in volatility. Speaking of which, lots of interest on the chat as well. And also, as we go into the weekend, a lot of interest about surrounding, those European assets, particularly the DAX. Lots of people asking us about the DAX. This coming in a time when we got that speech coming from the ECB vice president. We've also got the Europeans meeting the British in Lancaster House.
Very nice.
Seen as the first big meeting post-Brexit. Remember in the past, Elliot, they had all those meetings for a year, big meetings where every Mandarin here went over to Brussels, and then they had all night, negotiations, bargaining, and we didn't know what was going to come out until they ran out of water and printer paper. Well, of course, after Brexit, all that disappeared. Yep. The meeting in Lancaster House is the first one since then. So I'm keeping a close eye on this to see what that means. Yeah.
I'm surprised at that.
Yeah. But you got your eye on the Gundos.
Yeah, he came out yesterday and was very quick and keen to highlight just how US valuations for him still remain rather elevated. He was quick to point out that investors, in his opinion, remain heavily concentrated in US equities, or perhaps even oil. Roughly 25% of global GDP comes from the States, effectively, but more than 66% of global equity market capitalization is in the US. So there's a little bit of a imbalance there, if you like. He was, again, he wanted to highlight that, in his opinion, investors may be underestimating and underpricing the likelihood of further adverse scenarios, which I think, given the skew that has flattened so dramatically on S&P, I think it's fair. But as I go back, we are trading higher than we were pre-April 2nd, which is just insane.
Yeah, let's just remind our viewers here just exactly what you mean. And if you look at my white line there that I've drawn for you, we're back where we started, really, aren't we? This is the Dow here, which is called Wall Street on the IG platform. But really similar picture across the board. I mean, US 500, let's take a look at that. And if you look at my golden line there, we're back to levels around end of Feb.
Crazy, yep.
Yeah.
All is forgotten.
All is forgotten, forgiven? Not forgotten?
Not sure about that.
There's also this, talk about, the DAX still doing what it does best. Yep. It's breakout, right? It's broken out of that key zone here. For those of you that are safer but later, you might want to wait for, 3 closes above. But, here we are. We are past that level last achieved middle of March. And the UK as well, FTSE, I have to say, seems to have stalled a bit. Let's have a look at the FTSE.
FTSE's been relatively resilient and unexcited by the bulk. Yeah, hasn't been hit anything like as hard as what the DAX was. I guess you could say that the UK's a smaller, open economy, if you like. We do the bulk of our business with Europe versus the US, who's perhaps maybe slightly more tariff-proof. But certainly FTSE Vol front month has just gone sub 10%, which I've been here at 21 years and I've been on options for the vast bulk of that. FTSE Vol historically doesn't really go much below 9% perhaps. I've done a bit of analysis that said if you bought options every time that Vol went to 9%, historically you would do fairly well. So we're getting to the bottom of Vol here on the FTSE, which, given the month that we've just seen, seems crazy to be talking about.
Yeah, and I'm looking out to the contract, the 20th of June contract as well, and we are, you know, still sitting at that 9% level, almost 10.
9.6, exactly. Yep.
Yeah. I mean, the UK right now, you know, with Rachel Reeves as well, saying that they want to, in these Lancaster House talks, Starmer has talked about pragmatism. Those that are against, you know, this meeting and saying, why are we doing this when we've come out of the EU? Saying it's a waste of time, and basically the UK wanting to try and inch closer without looking like they're inching closer to the EU again. Those are for this meeting say that it may be true that we are already, you know, very advanced in our defense talks and partnership, and also there's NATO, but there's no harm in getting closer on, like, you know, cybersecurity, agriculture, things like banking services. And it comes at a time when the UK economy has had a bit of a surprise, chink of light, right?
GDP figure was slightly stronger than expected. Has caused a slight shift in the forward forecasts. I think there's maybe a little bit more risk to the top side than I think we thought about. Yeah.
Sterling as well. I mean, we're seeing you know, sterling and the euro had a bit of win in their sales rather. But are we in a point now where we'll see a short-term reversal of that repatriation that we saw from US assets to the likes of the FTSE and the DAX earlier this year?
Less on FTSE. I think DAX will continue. I was looking at what the dollar's done and having a look at the dollar vol over the last month or so. Vol's come off slightly. I'm a buyer of Eurodollar on dips, to be honest. Dollar's been slightly soft overnight on the back of this weaker US data yesterday. US yields have potentially found a top. I would like to see a move through 113 again on the euro, just to really show a real momentum building up again, essentially.
Right, Elliot, we don't have much time because Chris, I've got
let's talk about the zero DTEs.
Yeah, let's
just wanted to talk about the zero DTEs a bit. Okay, now, as I said, I've been running this options desk for well over 15 years, so we've been giving clients a chance to trade zero DT options on S&P for all of that time. The market took until 2022 to actually realise that this was actually a super product. Now, since then, the volumes have grown on exchange more than fivefold over the last 3 years. So you're looking at roughly an average daily volume going from roughly 400,000 contracts to 2 million contracts in this quarter, which is crazy. CFDs options now make up more than 50% of the total daily volume on S&P options. Another stat that I saw was back in 2015, option volumes versus futures volumes was roughly 10 to 1 in favour of futures. Now, there's more option contracts traded every day on S&P than there are futures contracts, which has been a crazy shift.
That is
So
completely
so that
changed.
chart that you've got there, that is, yes, you can really clearly see the growth in the 0DT options. Now, it's estimated that roughly retail flows 55 to 60% of this.
Yeah, I was going to ask you, is it because there's more retail flow now?
Definitely, yes. So looking at the volumes that are going through, slightly crude classification that single lot orders are more likely to be retail than institutional. It's around 50 to 60% the flow coming from retail side. Okay. This has dropped slightly during the crazy days of April 4th, April 7th, April 9th, when it dropped below maybe 40%. We've not seen all of that retail interest come back. The reason being is because premiums now are exponentially more expensive than they were pre-tariff talk. And even though that's now beginning to decline, it still takes a little bit of time. But can you bring up the next one where I show about the RV?
Yeah, let's try and get that one up. We are... okay, here we are. Apologies, Elliot. Phil's been away this week, so I am also producer Phil. We're very we're all multitasking here. So here we are. Pick 5. This one's a really exciting chart, people. I'll show you in just a second, because if I pull it up on the email, it's going to be too small. Here we go. Okay, we've zoomed in for you. There we go.
Right, thank you. Yes. Right. So, chart on the left, you can see that. So, historically, on any given day on exchange, 0DT volumes are between 55 and 60%. Start of April, that dropped down to about 35%. Now, the reason for this was the vol exploded on the monthly options. Now, these 0DT options are a fantastic way to trade if you've got a short-term view. For example, and I won't point the finger at anybody, but on the April the 12th, and this wasn't on SPX, which we offer, this was on SPY, about 10 minutes before Trump makes his announcement about the 90-day pause, somebody steps in and spends $2.5 million buying a deep out-of-the-money SPY call. Announcement comes out, that same trade made that individual or firm $70 million.
Wow.
Somebody knew that was coming out. Okay, so I don't know if that'll be investigated, but you don't have that volume going through every single day. So either someone had their volatility crystal ball absolutely spot on, or someone got a little tap on the shoulder and was aware that this was coming. But in terms of what the dailies can be used for, you don't have to spend a lot to really have a view. Now, I know that Rich is a real keen trader of the dailies, and actually on that same day, I think he bought a deep out of the money option for 3 that went off worth 50 or 60. So he got a real nice bang for his buck as well. If you ever look at the Exhibit 8 just on the right hand side, this goes back to saying what I said about COVID. This was the highest S&P 1 month intraday realized vol since 2008.
Amazing.
So was again, just crazy, given how bad that third week of March in 2020 was. VIX hits 80. That beginning week of April surpassed anything that we saw then.
Right, let's, I know we're short on time. Let's try and get your next one up just very quickly, because I want to make sure we get through all of them, because we've done, you've done such great work here. We've got a question from Arthur Fox Hagefers. Ange, can you ask Elliot what was going on with NVIDIA OTC options for the last few days? Until today, there were not many call strikes above the current stock price. Elliot?
Yes, apologies for that. That was a technical error. I actually heard that discussed yesterday. It's not directly looked after by my desk, that's looked after by the equity desk. So I actually even before you had come offline, I was already getting it fixed. So the guys have, it's become a little bit of a manual job as opposed to, it should be automated, but hopefully there should be more strikes now tradable online. If ever you see that, always get in touch and we'll do our very best to fix it.
Right, and here is our last chart of the day, which I'm going to zoom in for you, Exhibit 10 and 11.
Yeah,
Elliot.
just talking about the positioning in terms of what are clients basically trading, or I say clients, what are people in the wider market on these zero DTs essentially trading. There's a real split between buying and selling and also calls and puts. So you can see that actually the gamma is pretty much flat. Yeah, so again, you will have a slight divergence in behavior. You've got your 50 or 60% of the volume coming from retail, more likely to be buy side. You've then got your bigger tickets, which is going to be on the institutional side, more likely to be trading strategies and the like. But obviously, given the spike in vol, trading strategies become slightly less profitable, harder to manage perhaps. So still, I think it's about 60% are single leg tickets going through every day.
Wow.
So quite, yeah. All quite interesting, which I just wanted to share on this open forum. But as I said, we've been doing daily options for about 15 to 20 years on this. So we were well in front of the curve. And very quickly, I've got one new daily market coming out possibly next week, if not the week after, which I think will be very interesting.
Can you give us any more details, or do we have to wait till then, Elliot?
I can't shed any more light on it. Unfortunately, might be a particular interest for our professional clients.
Cool. We've got Chris Beecham coming up next. Hit the like and subscribe button because, you know, we want Elliot to come back and give us the, you know, heads up. And this is all very useful stuff for the, you know, coming few weeks. Elliot, thank you so much again. Have a great weekend. And Chris Beecham is coming up next with number of the week. So if you can guess the number before he can, then you get a gift in the post. So stay right there.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey, welcome back, trader friends, to Number of the Week. This is a segment where you get to try and outguess Chris Beecham, get to the answer first, and you win a prize. So, Chris, the number of the week, and you have to guess what it is about, is 210. 210 people. I am starting my watch now. You have 30 seconds.
Oh, 30 seconds, 210.
Producer Phil's going to make us a countdown clock, but he's on the beach in Menorca, so that's why I'm using my watch.
210.
210. The hints.
It can't be tariffs.
I'm looking at the sky. The hints.
Oh, okay. Something to do with blue sky, planes.
Closer. You're getting closer. Trader friends, can help Chris here. What is it you said, Chris?
Plane orders. Plane orders. Is it plane orders?
Close. Yeah. Closer. Warmer.
Okay. Is it Boeing?
200. Yeah, 210. I'm still. Monkey Man's probably there biting on the cricket bat that I sent him because he won the last one. Jugger says UHM new target. Jesse 14, Boeing plane sold to who? Jesse 14, if you can tell me to whom. Oh, I think Jesse 14 was first. I think Jesse 14. So Qatar Airways.
Who ordered them?
Yeah.
Oh, okay.
Yeah, because they said it was a plane order, but they didn't say by whom. So Qatar Airways says it's placed the biggest aircraft order in history with Boeing. And that number is 210. Not all of them firm orders, though, right, Chris?
Is it the biggest in history then? Wow.
Yes,
okay.
It's the largest in history. I think it was 160 firm orders and an option of another 50.
Okay. Gosh.
What that normally means on Street Talk is that firm 160 orders, 50 if we're still happy with the deal going forward.
Yeah.
Usually. But yeah, it is the biggest.
Well, it's the thing, isn't it?
Yeah.
It's like so much of what we're seeing at the moment. Factory X announces, or company X announces they'll build a factory in the States. You know that it's going to take at least 3 years, by which time the whole circus will have moved on entirely. Forgive my cynicism, but that's kind of how it works, isn't it? At this point in time. Yeah.
People tend to forget the past. But the other interesting thing as well is no one ever talks about, and this is the same at the DSEI here held in London once every 2 years. They will tell you what the list prices were, but no one ever really pays a list price for these orders. No. Right? So, but this is the biggest. This is the biggest aircraft order in the history of Boeing, and certainly the largest wide-body order, and the biggest 787 Dreamliner order in the aerospace company's history. Just very quickly, what do you think of the stock? We've got quite a lot of trader friends here that trade Boeing. I mean, this if you had to pick one stock that had a very colourful, shall we say it, recent history, this would be it.
You can say that again. Going up and down, and it still feels like a great company that's lost its way. Boeing, doesn't it? I think
Yeah, so
from
show the
years
monthly
and years.
chart.
If you look at that stock price. It couldn't do any wrong until 2018, 2019, which I guess is when those tragic crashes started happening, and it's not unable so far to recoup the confidence of investors, and that's the major problem here. If you've been sitting in Boeing for the last 20 years or so, or whatever, then fine, you're still very content with how the share price has done. But if you're a latecomer to this, and I say that relatively speaking, if you're a latecomer to this, it's an icon of US manufacturing, the US economy, and yet the returns have been not very good, to put it mildly. There's so many better ones on offer, I think, really. I mean, I don't know, I'm just looking at my Google Finance, Lockheed Martin, fairly reasonable. Boeing still outpaces them over the 5 years. Okay, so there's interesting. So there's not great either, but certainly the direction of travel for Lockheed is still much more promising than that for Boeing. Really, just to look on a percentage move.
Even drilling down from the monthly to the weekly, we're still seeing a lot of pain here. So just drawing that line for you to show you what we mean here. And you can see that the downward trend still remains despite that recent uptick there, as you can see, showing you the also the daily chart here, where I've drawn that uptick. But if you widen it out, it still remains very, very far from where it was all the way back in December 2023 even. Boeing as well, the other interesting thing about Boeing is that, you know, we are seeing this travel demand rise and the post-COVID recovery as well. But it hasn't managed to bring this stock back up to its heady highs, as you said, of, let's go back to when it was, you know, at its highest, 2019, February 2019 there.
Yeah.
And let's take a look at Airbus very quickly, because Airbus has been, you know, the one that's shone in the space in that time. So if you put money into Airbus, this is the monthly chart, people, drilling down to the weekly, showing you the 3 time frames there, Airbus has fared much, much better. And onto the daily. But oil prices are low,
much stronger performance.
Exactly. Oil prices still low, Chris. You know, do you think that we are likely to start to see the likes of, you know, the budget airlines like the Ryanairs start to creep higher?
It's boon. Yes, in the medium term, of course, because when you think about these airlines, it's natural to say, oh, oil prices down, great for airlines. No, because of course they're big businesses, they hedge this stuff months in advance. So the immediate impact of oil prices falling over the past couple of days is limited. But you have to look back at where we've been for oil prices. That, of course, has been a problem, because if you look back into January, we were up at $80 a barrel for WTI. Even in late March, we were at 71. So it will start to be reflected in earnings further down the line. So at least it's one to certainly to keep in mind if you're looking at these budget airlines, and whether we can see perhaps consumer spending picking up better, because you had a better reading on UK GDP yesterday. That's a decent read across for the sector too.
0.7%, right? Is that right? Yeah.
Well, 0.7, which is much, much bigger than anyone anticipated. And given you've had this, look at EasyJet, we're at £4.20. Well, the lows were £4 a share at the beginning of April with all the volatility, and then we are now at £5.50. We've gone through those February highs. Maybe, like I keep saying this to you, I feel like I'm just more of a stuck record than I normally am, but after such a big move in all these share prices, and every company you look at the moment has had this huge rebound from April, after such a big move, it's pricing in a vast amount of good news in the short term, I think. So it wouldn't be surprising to see some consolidation, but these are ones to keep on your radar if you are interested in that kind of expectation that we have of a solid recovery. Look at the way EasyJet has traded since September 2022. It's been a volatile ride, to say the least. Plenty of, I'm sorry for this, turbulence in the share price on its way. It rockets and then it comes off again and then it rockets again. So it's a bit of an all or nothing stock, EasyJet, really, in terms of its performance. But the trend is there. The fundamentals do appear to be there for the time being.
Lots of chatter coming in through the to chat as well. Do hit the like and subscribe button. We have Waka Waka saying Rolls-Royce is better. Eric Jones, good morning to you, Eric. Boeing made 348 commercial aircraft last year, so they pump out one per day. Andrew McKilvey, hey Andrew, it's the biggest order, but RAF bought over 1,900 Dakotas in World War II. Perhaps they were gifted? I love that.
We're dealing with it. Well, yeah, I think it comes under Lend-Lease, I suppose, as well, maybe. I don't know. That's the interesting story about World War II is the way that essentially British and French orders at the beginning of the war jumpstart US industry. They sort of, sorry, you've set me off now, but they just set up this joint purchasing commission and they just go en masse to the States. And suddenly these huge orders, and of course they don't really come through for another couple of years. But it's the story of how Britain and France really pushed the US economy into being ready for when the US enters the war. All this stuff doesn't come through overnight after Pearl Harbor. It's already there because it's responding to the orders already placed. Sorry, diversion there, but yeah.
No, it's a good one. And also we've got we'll save that for another show, but technical analysis also linked to how the Spitfire has been, there is a link there, has been rejigged during that time to make it more resilient to enemy fire. Boeing, according to Bigger Beers, needs to get the FAA off its back in the number of aircraft deliveries they're limited to on a monthly basis to start getting through the backlog. And as of April 30th, 2025, Boeing's total unfilled orders, its aircraft backlog stood at 6,273 aircraft. Bigger Beers, do you work in the plane business? Let's take a look quickly now because we are short on time. Chris, you talked about oil there. I have some technicals to show you. Putting up my WTI there. You saw me say yesterday that we saw this wedge formation. I'm still watching for this to either break out or complete. Failure to break resistance around 66 suggests the completion of this wedge. But for those of you trading WTI and you want a target or an indication of where this might go, you could also use, for the shorter term, the channel technique and draw the ABCD. So it would be A, B, C, D to estimate your price target on a shorter time frame. So I would take this off just to show you, and I'm going to try and zoom in, if I may, on this chart. It's a bit tricky here, but I've got a mouse thanks to Director Cam here, who wants to save me from carpal syndrome. And if you draw the line from March 31st and down towards that level there, then you start seeing where this might bounce below, and we could then potentially see if you're shorting this, potentially see it come down to that 55.56 level. Chris, anything to add before we let you go to start your weekend?
I would keep an eye, just looking at this, the DAX, another 50 points off its record highs from Monday, and we are again on the cusp of that 24,000 level. European markets, astonishing bounce, so that's the one I'm probably going to still watching for next week for the big. Maybe that's next week's number of the week, although I can't do that now because I've given it away. But 24,000 on the DAX next week wouldn't surprise me in the slightest.
We're very, very close. We're very close. Right. Please slam the like and subscribe button if you like number of the week. Jesse14, send me your address because I think you were the first there on the chat. So let me know on the email. Send it to me and we'll get that prize to you. Well done. For those of you, there are many more prizes, so make sure you tune into number of the week to try and get that prize. Chris, thank you very much. We've got Asan coming up next with me to finish off his series of trading experiences.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Right, a special Friday treat, ladies and gents, live from the beaches of Magaluf. It is producer Phil.
Hey, Phil!
Buenos dias.
Buenos
¿Cómo
dias,
está?
indeed.
¿Cómo está, Ricardo? ¿Cómo está, Angelino?
Angelino, it turns to, does it?
Magaluf,
Yeah.
how is Magaluf?
So like Callan Bosch in Menorca. It's. I mean, this is actually the first day we've had some kind of sun, and you guys have dragged me on here. So thanks for that.
Has it literally been that bad, the weather?
It's been okay. I mean, we've had mixed bag. 2 thunderstorms.
Yeah, I saw
but
the
I've got-
images. It's crazy.
Yeah, but apparently there's a drought here, according to Menorca government, but not that I've seen, because all I've seen is bloody rain. But I've got some kind of tan, and I've been tuning in every
Really?
single morning. Sounds like you guys have had good fun without me. Don't need me anymore.
Are you using the SPF
Well-
200?
300, yeah.
So the main reason we've got you on is because Maturin wants to know where his bloody Discord is.
Well, next week is going to be my #1 priority to push the Discord going through. It's all ready to go. I've designed it. I've made it. It's got expansion ideas and all that, but I'm waiting on people. So I'm going to be at their door knocking on it because I can see you guys chancing for it, and it's definitely needed. So I'll maturing. I promise you, I'm working on it.
Now, take us through what you're going to do in your last 24 hours before you jump on that TUI flight home.
Just sit by the beach, by the quiet pool. There's way too many bloody kids here. And for me and my partner, they don't have kids. It's been quite intense. So
Is
by
there
the
a nice
pool,
bar in the pool, though? A poolside bar, you know?
No, unfortunately not. And if there was, the kids would be at it. So I'm just trying to avoid as many kids as possible. So we're going out for dinner tonight around the harbour with my partner and her family and the nieces, and then just try and get a tan on. That's what I'm going to try and do.
Nice.
Now, what have we got to look forward to in the show next week, Phil?
I've got bloody no idea. I've still got to do it.
So I hope you're coming in Sunday afternoon to get all the things written up.
I think I'm going to have to, yeah.
Don't worry, Phil. I got your back. I got your back. It'll be sorted.
Thank you,
Don't worry.
Angeline. I've seen the overnight news every morning. You've done great.
I have to say, it's been hard being fake Phil and fake Cam.
I've got to say,
it's not easy.
For an assistant producer like Angeline's been this week to outshine the producer, it's taking some going.
I'll stay here then. Yeah. Maybe the sun will get better.
Please come back.
Awesome. Right. Well, we just wanted to have a quick check-in and everybody tell you, we are missing you, and safe flight home.
Thank you much. Miss you guys as well. I will be back Monday morning with many more polls, and only time will tell.
We'll see you after break. Ange, what you got coming up?
I have got Asan coming up with the last in a series. We talk about gold, silver, and also how to trade natural gas, his favourite. So stay tuned for that.
And that's me dipping out. So have a wonderful weekend, everybody. I hope you enjoyed this morning. I certainly have.
Yes,
enjoy the sunshine and enjoy that sight.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, trader friends, welcome back. And we are joined by Ash for the final in your series. Welcome back, Ash.
Thank you. Great to be back, as always, Ange.
I heard the company's been keeping you busy.
It has. It has. It's been keeping everyone busy.
Yeah. I mean, fintech is part of the cause, right? We roll with the punches.
Yeah, it's a lifestyle choice.
Is it like
This is what I chose, right?
That's why we've got such, pristine hair, Ash and myself, and we're still smiling. We're still smiling, rocking, serving the customer first. Speaking of which, it has been such a wild ride recently.
It has. It has. It's been an exciting week. It's been all over the place.
What's interesting is suddenly we're back again. It's almost as if the mad 2 weeks in April kind of was a distant dream. If you came back this week from your holiday after 2.5 or 3 weeks away, you would have thought, oh, nothing really, much happened on the markets because we have bounced back somewhat after this.
Fair bit.
Yeah.
As in highest since March.
Incredible. And the speed as well.
Yes.
Of this bounce back by the markets. Clearly, we're not out of the woods yet, but I'm so pleased you're back because we talked about so much on your trading experience and this trading journey. Many of our trader friends watching this also followed you along on your journey. Those that had never traded natural gas messaged me to say, hey, maybe I should look at the space. So thank you very much.
Oh, great. I hope they were following me, not how I traded. Definitely don't do that. Do what Ange has been guiding you towards, not me.
Well, I don't know. I had a pretty rough month on gold because gold in April, especially the last 2 weeks, didn't do what I expected it to do. Just showing you the monthly chart there, because gold, of course, has been, really the long-term trend still does remain. But I was trying to be contrarian and shorting in the last few weeks, and unfortunately my stop caught me out. But, I was safe. Guardrails were in place.
Absolutely. As in, if you don't have a plan, might as well not start the journey.
Oil, though, we have a lot of oil traders here, and this is one that we talked about in your series. Did you trade that the last few weeks?
No, I'm not going to lie. It was mostly metals focused over the last week or two. I stayed away from energy. Natural gas being one of them, because in volatile times, you don't want to be trading
No, something's already volatile.
something that's already volatile, unless you have the time, because again, volatility equals opportunity.
It does. And there is no reward without risk. Natural gas, you're right in saying, one of the more volatile instruments, even without the extra volatility caused by Trump. And in terms of oil and natural gas, just a few dates to keep in mind, because we always talk about not just fundamentals, technicals, but the dates you have to keep in mind. We have had the Saudis recently reportedly saying they're okay with lower prices for longer. So watch for any change in comment there. We also have on May 28th, the next OPEC and non-OPEC meeting. So looking out for that and any mood music whatsoever about, potentially more supply, or even without any change in supply. We're already in a landscape where we are looking at an oil surplus, right, going forward, in a time when economic growth is weak. And then in July, we've got the 9th OPEC International Seminar, which is taking place in Vienna, Austria. The Lebanese food there must be wonderful.
Lebanese food in Vienna.
Absolutely wonderful. So the other one, talking about metals, we talked about copper in your time here.
Yep. We started off talking about gold, which you mentioned before, and what to look out for. Gold being, of course, just to kind of recap, not just a safe haven asset, but also a hedge against inflation. And a lot of central bank activity in the recent past, just to kind of guard themselves against the volatility that is the U.S. economy as a whole. Talked about gold fundamentals. We talked about gold technicals as well. The golden line that you've got right there on your screen. So and we had a similar conversation about silver as well. Silver being slightly less volatile.
Yeah, let's have a look at silver. Whilst we can, silver tends to lag gold. It does have a similar trajectory, but it tends to lag gold. So I'm showing this to you here. This is the weekly, actually monthly first, and you can see that this is also on an upward trend, and the weekly as well, still in a strong upward trend there. But we are now getting very close to key support levels last seen in the middle of May and also in the middle of October. If we punch through that level of resistance, then we could potentially be going back to highs last seen in March 2012.
And it's an important point you mentioned there. If it breaks through, but it needs to, as with anything, it needs to break through with conviction. That's one of the things that we spoke about. Like on your graph right there underneath, you see volume. If volume doesn't support the price movement, it could be just the market trying to,
false dawn, false breakout,
sweep a fair value gap or find liquidity rather than actually move in a certain trajectory or break structure.
Yeah. Now, with silver as well, it's important to note, keep an eye on the options market for silver. We've got Elliot Harris here with us very often, saying that we are now seeing the cross between silver and gold on the options side of things, and this potentially could herald a bull run for silver. They have been waiting, has to be said, for this for some time. So, always a healthy dose of salt as well, of, skepticism. So make sure you do your own analysis. But for those of you watching this space, we are also now coming up to the key gold Indian demand market. Silver, though, is very volatile because it is also considered, industrial, and some of you, I know, trade silver, and a lot of gains can be made in the intraday because it's just a lot more volatile. So make sure you maybe take a look, small but often. And I like the fact that you remembered conviction. So close above with conviction. Now, your conviction could be different to mine.
Sure.
I like 3 daily closes by going long and big position. I like the later but safer. Have you heard that?
Yes.
The later but safer. So Ange is about the later but safer. So depending on your risk appetite, some people like 1 daily close above. I like 3. If I'm going in a bigger position, I like 3 daily closes above on good volume.
No, and like you said, it depends on person to person and the risk appetite, right? You're later but safer. I'm early but risky. But like you say, it depends on the click size, as in how big of a position you want to hold and how long you want to hold it for. So your risk appetite really comes into play.
Thank you very much, Ash.
It was a pleasure. Thank you so much for having me.